Let us look at Bank Nifty daily chart. Same development as we talked about on Nifty. There was this range, it was kind of expanded on this day, so now you can even call this a big range. We are still moving sideways at this important HVN. Now we did talk about time. If it is taking just enough time, then this is a very good thing, because then the breakout will be good, the absorption of supply will hold, and we will see prices moving and continuing higher. But if it takes too much time, then there is a problem, because then what happens is we really are not sure whether it is just extended absorption of supply or exhaustion. As it starts taking too much time, the possibility of a bigger inventory adjustment break increases. Let's say if you are looking for a mathematical answer, a definitive answer, a clear answer to this question, whether you can differentiate between just enough time and too much time, sadly you cannot. This question has been asked a number of times, and unfortunately I cannot answer it, because there is no answer to it. The moment you start putting on numbers on something which is a little bit subjective, it's not that you won't find correlations. The problem is that human minds are extremely good at finding correlations or patterns where in fact nothing exists. So I am very strictly against correlations. Instead, what I want you to do is ask logical questions. Right now, we are spending a lot of time here. What is more important is to see some sort of follow through to confirm whether the time spent here is actually exhaustion or absorption of supply. Now, the reason why traders are not happy when I say this, that you need to monitor the follow through, is because they believe that they are missing out on a trading opportunity. It's not like that. So I'll tell you why. So we have this consolidation of 1, 2, 3, 4, 5, 6, 7th day of the consolidation is going on. Lots of weak highs here, and here. Obviously, it looks like exhaustion, but the kind of down move that we are expecting is not developing. So definitely some demand is coming in at the lower levels, and it's not letting the markets go into a free fall. Let's say this range extension continues today, CDEF period. That is obviously some sort of follow through that yes, markets are finding new business at higher levels. We are able to break out of the range and we are finding acceptance above. Markets might move towards 38,350, 350, 400. And this is where the traders feel that they have lost an opportunity because they could not buy at this level. They are anchored to this breakout level. What I want you to do instead is don't get anchored to breakout or breakdown levels or references in general. Get anchored to behavior. This is very important. I mean, this is $1 million information here right now. Get anchored to trader behavior, not to trading chart patterns. The moment you shift your focus from chart patterns to behavior, you will understand the markets in a completely different light. Now here, what behavior I want traders to show me that they want to buy at higher levels. Now, if I want them to show me that they want to buy at higher levels, how can I expect them to tell me that information here, where we haven't even broken out and we are spending time here? So how can I know that the traders are happy to buy at higher levels? Yeah, one thing is very clear is that definitely the supply that is expected to come at these levels is not able to push the auction lower. That is very clear. But are they happy to buy at higher levels? Or this is just short-term market control which will end at some point in time, and as soon as the shorter time frames realize that they are not able to control the markets go into a free fall. So is it that kind of a scenario? Or is it a scenario where absorption of supply is going on and we find acceptance above this reference and we see sharp move going up? We need patience. We need this kind of development to tell us. For this possibility, we need markets to move sideways. Now, right now the start is very good, promising. IB Rex, subsequent range extension in C period. Now we observe D, E, F, and then later on H and I periods. What happens during these? Do we continue extending the range in D, F period? Then H and I won't matter, because whatever fall, if at all it comes, there might just be some sort of small pullback which will be bought into. It might even be a retest of a breakout level if it happens after we break out nicely. So we need to see these confirmations. We cannot predict whether this is enough time or too much time. It will most of the time be clear after the fact. Then you might ask, then what is the use of this concept? The concept is there to help you understand what the market was trying to do. And once you understand that, then you will be able to understand the trader behavior a little better. And when next time you start seeing such kind of behavior, you will, instead of getting hooked onto the price patterns or chart patterns or whatever is happening on the chart, you will be more interested in the trader behavior. And that is where the real prudent trading decisions are made. Whenever you are trading based on price, you might just get lucky for a long time. There are traders who are lucky for a long time, because it happens in the markets. Relying on price and price alone is not a safe and sustainable way to trade. At some point in time, you will face the music. You will have to give back the gains that you have made. Start focusing on trader behavior instead of price, and all these answers will start becoming apparent to you.